Get ready, guys. This is Quarantine Fitness. I want you to drop lower than your stock market portfolio. Feel the burn and the tears. Hey YouTube, my name is John if you guys don't know me. I hope that you guys are all staying really safe and healthy during this really difficult time. It's really terrifying out there what's happening with the world, and unfortunately things are turning out for the worse right now. The US Surgeon General said that things are going to get really bad this week, so everyone please practice social distancing and wash your hands, take your vitamins, and if you start having any symptoms, report it to the appropriate agency, okay? That being said, this channel is mainly a financial channel, so today I just want to talk about my bear market strategy. So currently I'm at a 4-month emergency fund, but that's based on my normal spending habits, not my apocalyptic spending habits. So based on my bare bones emergency fund, which doesn't include like eating out or going out or like having like any of my frivolous spending like due to my normal spending habits, my 6-month emergency fund is actually 15K, not 18K like I originally planned. Which means that after accounting for my credit card expenses, I'm actually 5 months into my 6-month bare bones emergency fund. So what is my strategy? My strategy, like most people, should be dollar cost averaging. I do plan on maxing out my 401k still, which equates to 13% of my pre-tax paycheck. I will also continue to place $200 in my Northwestern Mutual brokerage account, and it's actually at a moderate allocation, not an aggressive allocation like my other portfolios, so it actually didn't drop as badly as literally all of my other portfolios. The reason I had this as a moderate allocation as opposed to an aggressive allocation like my other portfolios was because this brokerage account specifically was meant for short-term financial goals, and I didn't really want that money to be at risk, and I'm glad that I did that. So at this time, am I planning on investing or am I planning on saving? Because I work in healthcare, I do have a stable job and a stable income at this time. We are facing a protective equipment shortage, so that's something that's really worrying, so I do have to be more cautious with how much I save versus how much I invest. I do plan on saving at least $3,000 a month like I normally do, and I probably will save more than that, to be honest, since I'm not going outside and I'm not having fun. But instead of investing all $3,000, I plan on actually splitting it in half. So $1,500 I'm going to keep in cash, and $1,500 I will still invest after I reach my 6-month emergency fund. Just given all of this uncertainty, I believe that's a pretty smart strategy for my situation. Remember guys, it's important to look at your situation specifically and weigh the risks and benefits of investing versus saving money at this time. I know many people probably will disagree with me and tell me to invest all of this money, but honestly that's where I'm comfortable with right now, and it will give me a head start to a possible down payment in the near future if I want to purchase a property. I still plan on saving $3,000 a month, but 50% I'm going to keep in cash and 50% will be investing. So that means $1,500 will be what I will be investing each month. So of that $1,500 that I plan on investing each month, I plan on splitting it 3 ways. So $500 will go to my Robinhood account, $500 will go to my M1 Finance account, and $500 will go to my WeBull account, which I haven't really talked about in this YouTube channel yet. So first, I'm going to create a bear market portfolio, and this was actually inspired by EasyWealthBuilding. Everyone check out her channel. I'm going to attach the link in the description down below to her channel. She is an experienced long-term investor and short-term day trader, and her information is really easy to digest even for a beginner, so I think she's a great resource for everyone. My bear market portfolio I'm going to keep in my WeBull account, and link in the description down below if you guys want to sign up for WeBull using my referral link. I plan on investing in Vanguard utilities because through this crisis, everyone's going to still pay like their water, gas, sewage, like all that stuff. My Vanguard S&P 500 ETF, a high dividend, low volatility ETF, Newmont, which is like a gold mining corporation, gold, and finally the Vanguard bond market ETF. I believe that this setup is more safe moving forward, just given the uncertainty with the market. Now, what are we going to do about my Robinhood account? I'm also going to put $500 a month into my Robinhood account. I have tons of stocks. I got Ally Bank, American Airlines, Verizon, Luckin Coffee, Hyatt, Equitable, and Target, and pretty much all of them are getting decimated right now. I also have ETFs and index funds that I plan on investing in. My Global Clean Energy ETF, my XOK, which is Technology Select Sector, and lastly, VTI. I plan on only investing in the index funds and the ETFs simply because I do think that companies at this time are high risk for bankruptcy, and I would rather diversify and mitigate my risk that way. I am really not confident that a lot of businesses will make it through this, and I'm not going to count on a government bailout. Literally nothing is being produced and nothing is being bought by consumers right now because we're all on lockdown essentially. Hence, that is why I will be diversifying across stocks in a portfolio consisting mainly of like an ETF and an index fund rather than putting all of my money into an individual stock at this time. Lastly, my M1 Finance portfolio, I plan on putting $500 a month into. My M1 Finance portfolio is literally getting wrecked. It is down more than 50%. Granted, I did start my portfolio and buy at the peak of the market, but you know what they say, you can never time the market. Granted, I only had like less than $2,000 in this portfolio, so I lost a few $100, so it's not like the end of the world. I plan on buying and holding. I'm pretty much keeping this portfolio the same, but I am adding a 10% allocation to VGT, which is your Vanguard Information Technology ETF. Therefore, my portfolio in my M1 Finance account consists of a 50-50 split between ETFs and individual stocks. M1 Finance allows me to do fractional shares, so I will be splitting the money that I'm contributing amongst a lot of different positions. I will be contributing to my Vanguard REIT, my International Equity ETF, my Small Cap ETF, and my Emerging Markets ETF, as well as VGT, which I mentioned earlier, as well as these following individual stocks: Lyft, Comcast, Tesla, Starbucks, Lockheed Martin, Disney, Grubhub, Hilton, American Express, and Delta. Although I know that Hilton and Delta are pretty risky positions right now, I'm willing to take that chance, and I'm going to try and gather up all of the stocks while they are low, and hopefully those companies don't go bankrupt. Alright guys, so that is my bear market strategy. $500 to my WeBull account, $500 to my Robinhood account, and $500 to my M1 Finance account, $200 into my Northwestern Mutual Brokerage account, continuing to dollar cost average into my 401k, which I'm maxing out, and the rest of my savings I'm going to keep in cash for now. Alright guys, let me know what you think, and let me know if you guys have any specific strategies to weather this storm. Please stay healthy, stay inside, and practice good hygiene, and thanks for staying tuned to my channel. So, bye everyone.